Hi guys, Daniel here. In this video, we'll be going through the annual investment portfolio review for the year ending 2021. As usual, here are the standard disclosures. Moving on. Now these are the topics that I want to cover today. For those who are not interested in the technical and fundamental analysis, feel free to skip to point 4 after going through the one-page summary. I'll have timestamps the different parts of this video for your convenience. Now without further ado, let's start off with a one-page summary. Now please pay attention to this summary page as I need all of you to have a generic understanding of what is the current state of the markets, and because of that, what is the outlook and our next steps for the investments. With regards to the performance, as I'm currently managing two portfolios, we will be just looking at the performances of the individual funds. For your own portfolio performances, please log into your own investment account and generate the valuation report for a more detailed breakdown. As to the individual performances of the funds, as you can see, apart from the Asia equity, the global and fund Smith equity had performed spectacularly well, mainly due to the easy money environment coupled with the optimism surrounding the US COVID recovery. On the other hand, 2021 had been a tough year for Asia due to the pessimism revolving around the Delta variant, as well as the developments in China, namely the regulatory crackdown as well and the property saga, right? Moving into 2022, my personal outlook on the market is that it's going to be a rough year ahead due to the fact that the world has to address the problems of high valuations in the US and the global markets, which will definitely affect the other markets when they experience a correction. Rising interest rates, which will generally slow down the economy and hence negatively impacting business performances. And last but not least, the high inflation rate that is floating around globally. Now, I've done a more in-depth video with regards to my market outlook for 2022. The link will be in the description below. Please go and take a look at it after finishing this video. Moving on to the third point, which is the outcome of the fundamental and technical analysis. Long story short, the findings from both the fundamental and technical analysis tells us that for the global equities, the market is currently overpriced, but we are still in the midst of a bull market. On the other hand, the Asian market is fairly priced, but we are still in the midst of a technical bear market. Moving forward, you can expect the prices of the Asian market to continue dropping due to the factors highlighted in the market outlook despite being fairly priced. Having stated that, the next steps for our portfolio is that I will be slowly rotating the money market funds that we had previously sidelined in July last year back into the equities at a much lower prices as the global market corrects itself back to fair valuation and the Asian market trades in an undervalued territory. That said, I will also be injecting more capital into the Asia market to buy the dip. This is highlighted in the message that I have PM'd you guys back in December last year, so please go and read it if you haven't done so. So yeah, that covers a summary of what you need to know about our portfolio. Moving on to the detailed analysis. Now the next point I want to talk about is the fundamental analysis for both the Asia and global equity. If you're not interested in the technicals behind the portfolio management, feel free to skip to the F.A.Q section. From an angle of the price to earning ratios, I think it is evident that the global equity is trading significantly above its long-term average, signifying an overvalued market, while the Asia market is currently trading around their long-term average, which signifies a fairly priced market. The same story can be said from the price to sales ratio, but for this specific measurement, both markets are trading above its long-term average, with the global equity trading significantly above their long-term average by 83%. From a nominal reading standpoint, the price to sales ratio for the global equity is also significantly higher than the price to sales ratio of the Asia equity. In fact, a single dollar of sales in the global equity costs more than twice of a single dollar of sales in the Asia market. And the valuation ratios are not showing signs of correction or slowing down in the global markets, unlike that of the Asian markets. Now this reinforces our findings in the price to earning ratio that the global equity is significantly overvalued as compared to the Asia equity. Moving on. Now that we've understood where the two markets stand in terms of the valuation, the next thing that we'll be looking at is the projection of the portfolio performances based on the outcome of my relative valuation model, starting with the Asia equity. Now after running the scenario analysis, these are the expected annualized return of the Asian market given a different combination of the annual earnings growth rate and the prevailing market environment of that time. Now you see here that there are two separate readings. The table on your left is based on the 1-year earnings per share, while the table on the right is based on the 3-year average earning per share. The key difference between these two readings is that the 1-year earnings per share are more affected by short-term developments, while the 3 years average earnings per share is less affected by the short-term ups and downs of the economy. That said, the key focus of the tables lies in the box that is highlighted in blue, which is the expected annualized return for a 5 and 10-year investment duration based on an annual earnings per share growth of 6 to 8%, which is aligned with the long-term historical growth rate of the Asian market. From there, you see that the estimated annual return is actually pretty decent, right? Based on the fundamental growth and the current price of the market itself. Feel free to pause if you need more time to digest the tables. On the other hand, for the global equity, given the current price and the annual earnings growth rate of 5 to 6% a year, the expected annualized return rate is really not that attractive as that of the Asia equity. From the projection itself, I think two things are certain. Number one, having a long-term horizon will increase your chance of making a profit from an investment, even if they are overvalued today, assuming that the fundamentals of the investments continue to grow. Number two, the price that you pay for an investment matters because every investment has a predetermined level of value that it provides, and the act of overpaying is never rewarding. Now that covers the fundamental analysis, and the next section will be examining the technical analysis of the two markets. For starters, let us first take a look at the Asia market as represented by the MSCI All Country Asia x Japan. Now from the chart above, we can infer a few items. The first is that the Asian market had experienced a trend reversal from uptrend to downtrend in the start of 2021, after hitting a long-term trend channel resistance as seen from the green parallel lines. The second is that for the entirety of 2021, the market experienced a steady decline, giving strength to the short-term bear market as seen from the red parallel lines. The third is that the indicators sing the same song as the RSI reversed from an overbought region in the start of 2021 and has since been trading around the oversold region from the mid of 2021. Lastly, the Klinger oscillator momentum had also been sustained steadily below the zero mark, hence signifying a bear market. All things considered, from a technical analysis standpoint, the Asia market is currently experiencing a bear market, and the market thus far has showed no signs of slowing down or a trend reversal at the current moment. Moving on to the global markets as represented by the S&P 500, from the chart above we can infer a few items. The first is that the short-term bull market trend is still intact as seen from the blue parallel lines. The second is that for the entirety of 2021, the market had been trading significantly above the long-term trend channel, which brings in the question of the sustainability of the current price action. A look in the RSI indicator reinforces the question of the sustainability of the given trend, as the market had been trading near overbought levels since 2020. The Klinger oscillator, however, showed an interesting development for the second half of 2021. From the indicator itself, it can be seen that the momentum is lowering, and as we currently stand, the indicator is signifying a bear market. Now this represents a bearish divergence where the price are trading upwards, but the indicators are showing signs of weaknesses, and what this means is that potentially the strength of the trend may be waning, right? As where we stand today, the global market is definitely still in the midst of an upwards trend, but investors should be cautious about the bearish divergence, as it may be a sign that the current trend might come to an end soon. So now that covers the fundamental and technical analysis of the portfolio. Moving on to the final part of this presentation, and that is the common concerns and frequently asked questions that I've received over the last year. Now over the last 12 months, the two most common questions that I've received is the question of whether or not you should be concerned that the Asia investments is not performing well, especially if you've just started your investments last year. The second question is whether we should pause the investments first and then resume it again after the market had bottomed. Let's address each question one at a time, starting with the first question. Should you be concerned that the Asian market is not performing well? My answer to this question is no, right? You should not be worried about the short-term performances if you are a long-term investor. If you look at the price development of the Asia equity, it is still within normal expectation, as the expected volatility of an equity fund usually range from plus minus 15 to 20%. While there are short-term headwinds that affects the Asian market, my long-term views towards the market remains unchanged. In fact, I've previously made a few videos to specifically address this concern that I've received, which I hope it will shed more light as to what you can expect when investing in emerging markets like that of Asia and how you can deal with the volatility. The links to this video will be in the description below. The second question is the question of whether we should pause these investments first and then buy back in again after the investments have bottomed. My answer to this question is no, right? Please do not try to time the market. While I understand why you would have this sort of thinking, it is actually us succumbing to our emotions and common biases which impels us to take action to feel good in the short run, but unfortunately this action will only impede and sabotage our long-term performances. Recall that we have a strategy in place, and if you want to do well in the game of investing, it will be best for you to stick to the strategy itself. Once again, I've made a few videos to shed some light on the common investment biases and the effectiveness of a dollar cost averaging approach. If you still have any doubts or concerns after watching these videos, please PM me directly and we will set up a Zoom meeting to address your concerns. Now that's all I have for this annual portfolio review presentation. If there's any other questions, you all can just reach out to me directly. If not, I'll catch you in our next annual review. If you have not yet subscribed to this channel, please do so to stay updated with future updates. And of course, if you know of any friends or family members that need some help in their financial planning, do give me a chance to introduce myself to them. Stay safe and I hope to see you soon.